Hello everyone, hope you guys are doing great and welcome back to the channel. So in my today's video, I'm going to analyze the Q4 FY26 and the whole year result of GSM Foils Limited. We'll go through their numbers, then we'll go through the con call also and what the management gave the updates and what are their growth plans. So let's get into it, right? So if you look at their Q4 number, so the revenue grew by almost 79% to 81.69 crores and the PAT was up by almost 84% to 6.28 crores. And if you look for the whole year number, right, it grew by almost 93% to revenue grew by 93% to 258 crores, and PAT was up by almost 106% to 20 crores. So if you look at the overall year, right, the numbers are quite great. So the management delivered what they promised, because at the start of the year management has said that they're going to do a revenue of around 200 to 240 crores and they have exceeded by doing it to 258 crores. But there were some challenges, because if you look at their gross margin and their EBITDA numbers, right, they were all down for this quarter, and which has if you see overall for the whole year also the numbers have been slightly dragged down. And the main reason is, yeah, why? Because the management said that because of this Iran, Israel and US war, right, there has been a lot of volatility in the market and there have been a lot of increase in the raw material prices, especially in aluminium and as well as the certain chemicals that they use in the whole production. So that has impacted the gross margin as well as the EBITDA margin. But because the plant was operating so efficiently and all the improvements that they have done, but the overall PAT margin did not went down. So the overall PAT margin slightly increased to around how to say 7.7%. So if you look at this number is details, right? So if I look at the gross margin from quarter, YOY quarter basis, it went down by almost 3%. But if you look at the YOY basis, it went down only by 1.3%. And for the EBITDA margin for the quarter on quarter basis, sorry, YOY for Q4 went down by almost 1.2%. But if we look at the overall, the yearly basis, right, it actually improved by 0.10%. So this clearly shows that this decrease in the gross margin and the how to say the pressure on the EBITDA margin is because of the recent macro thing, macroeconomic situation which is going on because of the war which is currently happening. So the management says that once things are stabilized and the war ends hopefully and the things stabilize, things are going to get better and margins are going to gets stabilized. So, and the other thing the management said, right, is that the Ahmedabad plant, right, which they newly started, so it has started running quite well. So, and it is ramping up also well, and they are confident by the end of FY27 they'll be able to reach 100% capacity. And this plant will mainly cater to the western region and to the northern markets, the clients which are available over there. And this is going to help, right? And in terms of the run rate, if we see, right, what the management said that for the last year, the Ahmedabad contributed a monthly run rate of around 5 crores to the overall revenue. But going forward, if when it runs at how to say uh, of full capacity utilization, the Ahmedabad plant can alone contribute to around 30 to 35 crores sales per month, which if we take for the whole year, it's almost around 300 to 350 crores, which is almost like more than the current overall yearly revenue that they have. And in terms of the Vasai plant, which they already have, right? So the current monthly run rate is around 25 crores to 28 crores per month. And management said that if there are some things that they're doing over there, and they can still improve the capacity by another 15 to 20%. So let's see how does that go. And if they are able to achieve, both of it, they can literally, how to say, increase their revenue going forward to almost 550 to 600 crores in the coming years. So let's see how does that pan out. In terms of the other question that was asked on the con call was that why were the receivables very high? Because if you look at the pure receivable numbers, right, they almost tripled. So the management said again it is because of what is happening globally, right? Because of which the pharmaceutical companies whom they deal with, they were under pressure, so they requested the company to give them more credit. And obviously to save the relationship and the business, the management gave them a quite longer period, due to which the receivables increased to almost 90 crores. But the management said that the things are getting stabilized. In the first 10 days of April only, they were able to sorry, get a quite large sum back from this receivable, and they hope that in the coming days and weeks, it's going to get stabilized to the normal day. But because of what is happening overall, they clearly said that the creditor days will last up to around 60 to 70 days going forward. And if you look at the raw material prices and the impact on it, so management said because the how to say, the turnaround of converting from raw material to a finished product is quite less, there would be very less impact. But at the same time, the way the prices are increasing right now, it is becoming a challenge, and it is happening across the whole sector, whole pharmaceutical thing. So the management is saying we have to wait and see how things progresses, whether this is going to continue, whether this is going to get stabilized, and if the prices increase in the overall industry, they will be able to pass on to it. Otherwise, they will have to see which cost can be passed on, how much to be held back. So they are not sure at this point of time. All they are saying is like we need the overall global things to stabilize. And if you look at the growth, right, management gave a very conservative growth target. They said that next year they're going to do a revenue of around 400 to 450 crores from the current 258 crores. And if you look at the numbers in percentage, it comes up to around 50, on the lower side 55%, to around on a higher side up to around 74% revenue growth. And personally, with the way management has delivered in the past, I believe that they'll be able to achieve the 450 crores target. And if things stabilizes in the overall market, I think they can even do better. So the other question which was asked was regarding the CAPEX and the expansion plan, because once this Ahmedabad plant, right, goes into full capacity by the end of FY27, in order for the revenue to grow, right, there has to be more production. So the management said that they are looking into certain things, but at this point of time, nothing is concrete. So they'll wait for another 6 months to look into these things for Ahmedabad plant to stabilize, and then only they're going to reveal any plans. But they are definitely looking into it, how to increase their overall capacity. And the other thing which they said is, right, when they're going to increase their capacity and when they look forward for the future, they might how to say diversify into high margin products in their same line of products that they are producing, which will help them to get better margins. But the management is saying that they will be able to do that only once the overall situation in the market stabilizes, because they don't want to commit on to certain things where currently the things are not in terms of the overall market is very volatile. So they want things to stabilize, and once things get stabilized, then they're going to do this forward integration. So we have to wait for H1 of FY27 to wait for that update. So we'll wait and see, and whether what the management has said, are they going to do it or not? Because the if we see at the company, right, they're doing quite great, because they've increased their sales by almost close to, for the whole year, by almost 90%, and the next year they can increase by almost 70%. And the point is, what after FY27? That's the question for the company. Okay, FY26 we have the clarity and how the company will grow. But if the clarity does not come for FY28 by the mid of FY27, this could be a challenge for the company, because from the investors to the analysts, the question will definitely come where the growth is going to come from, and that could be a problem for it. And that is the biggest risk if you are invested in this company, an investor could face. So let's see how does it go. I'll definitely keep you guys posted on the results which will come in Q1 as well as Q2 of FY27, and let's see in whether after 6 months of FY27 whether they'll be able to give any expansion plan. And if you like the analysis, please do subscribe to my channel and like this video. Thank you and God bless you.